Hello students, how are you? Today we are going to solve one more question of this admission of a partner. So I'm reading the question here and this is on your screen. You can just look at your screen. I'm reading the question. X and Y share profits in the ratio of 5:3. Their balance sheet as on 31st March 2018 was: first, liability side, creditors were of 15,000, employee provident fund EPF, that is called, that is 10,000. Workmen compensation reserve is 5,800. Capital is given here. X capital is 70,000, Y's capital is 31,000, total capital 1,01,000, and the total of liability side is 1,31,800. And the asset side, when we see here, cash at bank 5,000, sundry debtors 20,000 and 600. Doubtful debts, provision for doubtful debts is given here, 600 rupees. Net debtors are 19,400. Then stock is given 25,000, fixed assets 80,000, and profit and loss is given here 2,400. Profit and loss, as I told you, that is the loss given on the asset side. And on the liability side, employees provident fund, this is the fund that is to be distributed, to be given to the employees. This is not the fund for the partners. Then comes workmen compensation reserve. This is the reserve that can be distributed among partner because it is the part of the profit. Okay, and because if there is no claim, then it will be distributed. Then further it says they admit Z into partnership 1/8 share in profit on the date. Z brings 20,000 as his capital and 12,000 for goodwill in cash. Z acquires his shares entirely from X. Entirely he takes from X. Okay. Following revaluations are made. Number A, employees provident fund liability is to be increased by 5,000. Means earlier it was how much? 10,000. Now it has increased to 15,000. Okay. So 5,000 increased. All debtors are good, therefore no provisions is required. Okay. Then comes. So next is stock included 3,000 for obsolete item, means outdated it has become. Then come creditors to be paid rupees 1,000 more. Creditors are increased here. Then E, fixed assets are to be revalued at 70,000. Means value has gone down by 10,000. Prepare journal entries, necessary accounts and new balance sheet. And we have to calculate new profit sharing ratio. Okay. Now we'll solve this question here. So in the question, as we have already read, first of all we will make revaluation and capital account, and after this balance sheet we will prepare. So here in the capital account, in the balance sheet, old balance sheet, we see the capital balance is 70,000, 31,000, it is there. Then what is to be given to the partners, and they are distributed, that a fund is there, but it is employees provident fund. This is not distributed. And then comes the cash at bank and debtors, provisions, stock, fixed assets, profit and loss account. This profit and loss, that is the loss of the firm that is kept here. So it will be distributed in partners in their old profit sharing ratio. So what should be the journal entry? Partners capital account, X capital account debit, Y's capital account debit to P&L account. So here, so their capital account will be debited. So X here to P&L account. So how much amount? This is 2,400. It should be here in 5/3. 2,400 divided by 8, 5. 5 and 3 means total share are 5 plus 3, 8. Out of that 5 X is getting. So If we divide it, 8 3 are 24, 0 0, 3 5 are 15, 1 will take, and then 3, another one, 3. So 3 3 are 900, another one 3. So 1500 will be borne by x and 900 by this y. Okay. So this is the treatment for this. Okay. Now come to this next question now. And nothing else is there. Then they admit Jed entered and he brings 20,000. So what is the journal entry? Bank account debit or cash account debit, whatever it is. Goodwill in cash he brings. His capital and then goodwill. So cash account debit to capital account, Jed's capital, and to premium of goodwill 12,000. Okay. So by cash capital account, so who brings Jed's capital is 20,000 rupees, so we'll keep here 20,000 rupees, and then 12,000 goodwill, that will be then it says that who is sacrificing here his share. So Jed acquires his share entirely from X, because X is sacrificing, he is giving from his share, and nothing is borne by Y. So the whole amount of this premium will be given to X. So by premium of goodwill. So what is the journal entry? Journal entry is there. First, when he brings this premium of goodwill and capital, cash account debit to premium this to capital, that is 20,000, to premium of goodwill 12,000. After that, the premium of goodwill will be given to will be credited to X account, because X is giving complete share of Jed. So the complete share will be premium of goodwill, that will be 12,000 will be given by this X. Okay. Now come the next one, premium of goodwill account debit. Now what is the journal entry? Premium of goodwill account debit 12,000 to X capital account, because X is given. Revolution also made employees provident fund liabilities to increased by 5,000. Increased by 5,000. So employees provident fund now it will be arranged from the revolution account. So what is the journal entry? Revolution account will be debited with that. Okay. And this is employees provident fund is the liability. So liability is increased, so liability when increased are credited. So revolution account debit to provident fund. Provident fund liability is increased by 5,000. Then comes all debtors are good, therefore no provisions is required on debtors. So provisions were made 600 rupees. Now this will be removed. So 600 it is now, means debtors are increasing. So that here debtors account debit are increased by 6,000 by 600. So debtors or provision of debtors, we can say provision of debtors account debit to revaluation account. Okay, this is the journal entry, provision for debtors account DR to revaluation. So by provision for debtors, provision for debtor, bad debts we can say, on debtors, that is 600 rupees. Now is removed. Then comes
4 lakhs
600. Now comes all debtors are good. This is the stock includes 3,000 for obsolete item. Stock includes 3,000 for obsolete. Old, the stock has become old, means the value has gone down by 3,000 of the stock. So stock value goes down by 3,000. So when assets goes down, it is credited. If the value increases, we are debited, and if it is decreases, credited. So they are, so what is the journal entry? Valuation account, we have debit to stock by 3000 rupees. Okay, then comes the next one, that it says creditors are to be paid 1000 more. Means liability has increased. To creditors, when liability increases, creditors are increased by 1000. Then comes fixed assets are to be valued 70,000. And earlier in balance sheet it is shown 80,000, means it has gone down by 10,000. Fixed assets to fixed assets 10,000 rupees. Okay. Now, and nothing else is there. Prepare. Now we'll take the balance here. What is the balance of this? Total, first of all, total 10, 11, 14, 19. This is 19,000 and 90,000 by balance, balancing gain by loss transferred to X, Y, X capital account, Y capital account. So how much it comes? So it is balances total how much? 19,000. If we subtract this 600, 18,400 it comes. 18,400, and it will be divided in ratio of, in what ratio they divide they used to divide 5:3. So 5:3, 18,400 divided by 8 into 5. Okay. 8 2 ja 16, 8 3 ja 0 0. And multiplied by 5, 5 0 0, 5 3 ja 15, 5 2 ja 10 and 11, 11,500. So 11,500, X will born 11,500, and if we multiply it with 3, then it comes 900, and 3 to just 6,900 will be borne by this Y. So total is 18,400. Okay. Now this loss is to be transferred to partners capital account. So the partners will be debited with that. What is the journal entry? X capital account debit, Y's capital account debit to revaluation. So to revaluation account, how much? 11,500 and 6,900. Okay. Okay. Now, what is the next? Employees Provident Fund, debtors, creditors, fixed assets revaluation. Now it is solved. And now take the balance of the capital account of the partner. There is workman compensation in the balance sheet. When we see that workman compensation reserve is 5,800, and there is no claim against the workman compensation reserve. If no claim is there, reserves are the amount created from the reserves are the account created from the profits. So it has gone, the partners got the right on that if no claim is there. So this workman compensation reserve has also the fund of the partners. If no claim is there, there is no claim, so this will be divided among partners. So what is the journal entry? Workman compensation reserve debit to partners capital account. Okay, 5,400. So their account will be by workman compensation reserve. What is the amount? That is 5,800. So 5,800 if divided, 5,800, and their whole profit sharing 5,800 divided by 8 into 5. So 8, if we divide it, seven 25, 5 5 5. So this is 3625. 3600. So workman compensation will be divided 3625 x will take, and if it is 3 upon 8, so multiplied by this. So 3 5 ja 15, 3 2 ja 6 and 7, 3 7 ja 21, 2175. 2175. So total, if we make it, this is 00, 678 and 325. Okay, so this is distributed. Now we'll take the balance. Again we will check if some amount is left there. So in the balance sheet, creditors, workmen company, employees provident fund, total is given, cash at bank, debtors, provision, stock, fixed assets, and P&L already debited here. Now we'll take the balance. Okay, we'll take the balance here. So what the balance? First of all, this side, this is 70, 85, 70, 80, 85, 625, and this is 33,175, and this is 20,000, and this is 85, 625, 33,175, 20,000, and to balance carry down how much? If we this is 625, 625, and 2 and 3, 325, 72,000, and 9918, it is 75 over here. Then 9918, 321, 8, 25,375, and this C 20,000. So these are the capital balances over here. Okay, of the partners, these are the capital balances. Okay, now we will make this balance sheet. So students, this is the balance sheet here of the partners. So cash was there in 5,000 rupees there with the this in old balance sheet. After the new partner is admitted, he brought 20,000 capital and 12,000 premium of goodwill. So with that amount has been increased, and so 20,000 plus 12,000, total how much amount this is now with the firm? That 5,000 and 32 plus 5, 37,000, 37,000, because this is 32 plus 5, 37,000. Then comes debtors 19,400 were there, because 20,000 minus 600 were the bad this doubtful debts that were deducted. Now all are good, it says of 600 rupees. So 600 with 600 it has been increased, so it is of 20,000 now. And stock, it says that stock has been absolute, have 3,000 rupees absolute items and are outdated, so it will be deducted by 3,000 rupees. So it is 22,000 rupees. Then comes fixed assets. Fixed assets, it says that fixed assets are to be revalued at 70,000. Means it was 80,000 earlier, now it is 70,000. Means 10,000 values has been decreased. So it is 70,000 value of assets, fixed assets are there. And there is P&L account. P&L account balance is there. So it has been debited to partners capital account. So it won't be shown here. Okay. Now it says creditors side. If you say in this creditors liability side, it is and this is asset side. So creditors, it says that 15,000 were there in the old balance sheet, and it says 1,000 rupees and creditors are to be paid more, means it has been increased by 1,000 rupees. So now the creditors are of 16,000, and EPF was 10,000 and it has been increased by 5,000, it says. So employees provident fund liability is to be increased by 5,000. So liability is increased by 5,000. So now it is 15,000 rupees. Okay. Then WCR, workman compensation reserve. It was 5,800 in old balance sheet, but it is distributed among partners. So now there is no balance of this WCR and no claim is there also. So it will be removed from here. Then capital account balance is there. We have taken this by. So X capital, capital of X, Y and Z. So 72,625 X and Y's capital is 25,000 and 375 and 20,000 of C's capital. So total how much? If we add up this thing, then it is 0, 0, 6, 3, 9 and 10 and 3 and 5, 8, 3 and 5, 8, 7, 2, 9 and 2, 11. Okay, 7 to 9 to 11, 1,18,000. And if we take the total of this, it comes, this liability side total is 0, 0, 0, 6, 5, 11, 8, 19, 2, 3, 4 and 1,49,000. Okay, 1,49,000. And here if we take this, also this is 0, 0, 0, 3 zeros are there, then 7 to 9 and 3 to 5 to 7, 7, 14, 1,49,000. This is the total, and now this is solved.